define the mandate of this fund and what sort of returns are you aiming at?
This fund was actually born out of an investment that we had made out of our special situations fund, where we realized that there is a secular opportunity in cash flow generating infrastructure assets, which were the result of the previous era of financing. And many of them had a broken balance sheet. So all it required was reset the balance sheet. And there are very significant number of infrastructure assets which are currently cash flow generating, but don't have the kind of balance sheet structure. So this fund essentially goes to solve those problems and also give the cash flow back to the existing banks. To your question in terms of what kind of target returns that we are looking at, we think that in INR terms, we could potentially get to between 15 to 17% return. Today, on cash flow generating assets, a number of institutional investors are buying assets at about 11 or 12% rupee yields. We believe that the delta risk that we take for doing these kind of transactions more than compensate by getting an additional 30% uptick in terms of the overall return. And that's the target for this particular fund.
I do want to understand AIA, that's the Asian Infrastructure Investment Bank's investment in the fund, because obviously there's a fair backing there from China. And so what is it that they're looking for in this collaboration, in this investment?
I think, look, AIIB is a multilateral development institution. India is also a contributor to that. So from their perspective, any capital that goes towards... Yeah, that's fine. It's China contributes to the World Bank as well. So as a multilateral development institution, they are interested in developing infrastructure assets in the region. And they're just one of the participants in the fund. We have a number of other institutional investors, as you know. And essentially, if it goes towards freeing up capital for the banks so that they can on-lend to other development assets in India. As you can see, in terms of infrastructure assets in India, most of the global investors shy away from financing development assets for a number of probably right reasons in terms of development risk, whether it is land acquisition, permissions, execution risk, etc. So the idea here is that we free up the domestic banks' capital. They can provide that capital for development of the assets. That's an area where there is shortage of capital in India right now.